Good morning, and thanks for joining us here on Treasure Coast Solutions every Wednesday morning from 9 to 10 o'clock. We talk about things that are going on in the economy that could, in fact, impact you here in Stewart. Some of the things that you may or may not be aware of, and some of the things that you would want to maybe kind of plan for or be aware that might be coming down the road. So that's the purpose. It's kind of a informational type program, more economic focus, just to kind of get people to understand a little bit about some of the economics behind some of the politics, some of the economics behind some of the things that happen, and maybe have a little better understanding of why certain things don't happen the way we want them to happen. And it's because the interesting thing about economics is that sometimes the path to the ultimate outcome is convoluted, but the result is the same. And so sometimes people get, they get confused by the path. So, for example, if you're out, walking in the woods, I remember one time I was up in the Gainesville area, and we were walking back in a nature preserve back there, and they told you got to go out this path, and then you take a right, and you follow this down a ways. I love the ways. You follow the path down a ways, and then you'll get to this exhibit. So my son and I and my grandson, we decided we were going to make that walk and go ahead and do that. So we started walking, and we walked. And we walked, and we came to the right, and we made the right, and we walked, and we walked, and we walked, and we kept going and going for probably about 8 or 9 miles, and we ultimately made it to the exhibit. Not the way that it was intended, but I guess kind of all paths led to the exhibit. So to a large degree, no matter which way we went, we would have gotten there. If we'd have gone the way that we were supposed to, we've gotten there a whole lot faster, about like 9 miles faster. But the way we went, we still got there. And that's the thing about economics. Some days you can go the long way, and some days you can go the short way, but ultimately you're going to get to the same destination. And that destination is not always good. But anyway, so that's the kind of things that we're talking about. Why that maybe the paths don't make as much difference as what the ultimate destination is in economics. And so don't, kind of maybe give us a little bit of an insight into why we should know what the outcome is going to be before we start on the journey, and are aware of that, so that we know where we're going to end up. And it may take us a little while. We may think we're going one way, but ultimately it'll tell us where we're going to end up. So anyway, my name is Mark Brechbill. I'm a CPA, and I also am a ex-banker. I was in the banking industry for a number of years. I worked with one of the big CPA firms out of Chicago, and did that for a number of years. So I've had an opportunity. I don't know whether it's been a blessing or not, but I've had an opportunity to work in the financial arena for a long time. And in the financial arena, many, many times we have to deal with the economics of a situation rather than just the politics. It's kind of interesting. If you talk to a lot of CPAs, it's kind of hard sometimes to really to pin a CPA or label a CPA in terms of maybe political sometimes, because a lot of times on the social side that they may be more liberal or whatever. But it's funny that most CPAs are consistent on the economic side. They tend to be what many people would view as conservative, but they're not really. They're really just pragmatists. They know economics, they know accounting and finance, so they know what the outcome is going to be. And so as a result of that, they don't always get, they don't always have the answer that you want. They don't always have the political thing that you want, because they know that political outcome is not always, realistic. It's not always going to happen. Of course, some of that depends on that CPA's own experiences and some of the issues that they've dealt with in their life. But it's it's kind of interesting, and they may be different on taxes than they are on some other areas socially versus how they are on audits and things like that. So, but it's kind of interesting. We have to deal with those issues on a regular basis as a CPA. So it's kind of interesting on that. There's a couple things I wanted to talk about. Like I said, this is a informational community service program, which part of that I am part of the community. So if you have some information for me, I welcome that too. 220-9788, 220-WSTU is the number in the studio. So if you wanted to, give some information or add something, or welcome the call. Did want to mention, some of you may have seen just released this morning that there was a data breach on the SBA's website relative to the Economic Impact Disaster Loan, which is the 7B program. That's different than the Payroll Protection Plan or Payroll Protection Program, which is the 7A, the PPP. It's the 7A1 program, but I don't think you need to be worried about it, because when you get into the details, um, the website itself was breached on March 25th. Well, frankly, most of this stuff, if anybody was filing on March 25th, that was really early on. A lot of this stuff didn't start getting filed until around the 30th or the 31st. Even the early filers were filing somewhere around that period of time. And just so you know, that as of the 30th, uh, the SBA went away from their website and they were no longer using the system that got breached. They had made that decision previously because the system was bogged down. So they were using another system. They were using one from Rocket Mortgage, which was not breached. So and the EIDL system right now is safe and effective. It was not. What happened is somebody wasn't really looking to breach it, and they don't know for a fact that anybody got information. What technically happened was, prior to March 25th, if you went on to do an EIDL loan, those are done through the SBA, not through banks. So you log directly onto the SBA system. When you logged onto that system, you would put in your information, and you would load up your information about your business to qualify for the EIDL, including the owners. What was happening there, I guess, is they found out, like I said, on the 25th of March, that if you hit the back button, it would take you to the previous application, not necessarily your information, but if you were on the right screen, it might take you back to somebody else's application, which then would give you access to their social security numbers and all of those kind of things. They don't know that anybody did that or had that or how much of that has occurred, but it was stopped as of March 25th. So if you filed an application under the new system, then you're not affected by this. If you filed under the old system, you probably already got a letter or an email saying that you needed to reapply on the new system. Now, it's possible that your data there could have been looked at, but that stuff was all taken down. It was all transferred to another system, so it's not sitting there still available to be looked at. So I don't want anybody to think that they can't go apply for the EIDL because they're worried about what's going to happen, because you're safe and you can get in there and do that. So just so you know, the EIDL has been a very popular program. It actually is the base of the recovery program because it provides long-term funding for businesses to weather this. The PPP's gotten all kinds of publicity because the money can be forgiven. I guarantee you most of it will not be because of the way they're doing it. But and that's not the fault of anybody other than the fact that they rolled out this program without really a clear definition of some of the details, and the details make a difference. And I can kind of give you some background on that if you want. But the you know, like I said, the portion of the website that was a problem, um, it has been it has been disabled. Um, it was and anybody that was affected by it has been notified at this point uh, through some sort of a letter as to what's going on. So anyway, that's what was being done. There's no sign yet that any of the data has been misused, um, and like I say, it's been disabled. Um, if you have a problem with it, the government is offering um, a year of free credit monitoring. Just so like I said, this program has been very popular. Um, it you're eligible up to a $2 million loan. Um, but what's happened is that they've been forced to limit the loans or the advances right now to 10,000. Now they're not limiting the loans. There's some bad information sometimes. Uh, you know, it was very popular. So the amount of advance money that they're giving, which was originally going to be 10,000, what they've done is uh, they've given you $1,000 per employee up front. The rest of the money is still coming in. Right now, the rest of the money, they're slowly but surely approving or sending out paperwork to approve those loans. And my understanding is what they're going to do is if you qualified for a loan in excess of $500,000, they will send you $500,000. If you're under $500,000, they'll send you the money you qualified for. If you qualified for more than the money they send you, the $500,000, you can go back and apply for the difference, but you then have to show economic loss. And so that's kind of an involved calculation. You might, and if you're not careful, you actually could end up showing that you had less loss than the $500,000, and you have to give some of that back. So my advice would be just be happy with what you get, because that $500,000 is a fixed rate loan for 30 years at 3.75%. That is a really, really good deal. It's equivalent to a home mortgage. And it can be used for any working capital purposes, not just payroll, but it can also be used to help out with other expenses that don't get covered by the PPP, or with retirement expenses and things like that. So, just some general numbers. I did mention that right now the EIDL isn't accepting applications because they're waiting for another round of funding. That $60 billion of that is in the next bill. It's interesting because the SBA funding under this EIDL is technically not used until it's not paid. In other words, the government can give out a certain number of guarantees, which uh, which is different than the PPP. The PPP, the Payroll Protection Plan, they're guaranteeing 100%, and then if you use 100% of the money for payroll costs and you maintain your same level of employment, you get that forgiven. So that's why they've used up the money, because they're assuming that all of those loans are going to get forgiven that they're making right now. But in reality, most people won't use 100% for just payroll. They'll use it for interest and rent and utilities and all the other things that they say you can use it for, but that doesn't qualify for forgiveness, because you got to use it at least 75% of the loan has to be used for payroll costs. And those are very specifically defined, although there's questions about them, but they're defined in the act, and they're not the same as what the banks are using to define how much money to give you. The banks have to follow the SBA rules in terms of determining how much you're eligible for, so they don't give you more than you're eligible for, because then if they did, they have to take the risk on those loans. So as long as they follow the SBA rules for what they can do in terms of how to make a loan, then they're not going to get those loans back. And here's an example. In some cases, you're entitled to utilize payroll from a certain period of time. But if that information, so you're supposed to take the payroll for the last 12 months, and there's other things that are defined as part of payroll. You're supposed to take payroll over the last 12 months, and you're supposed to then utilize, you take the average of that, and that supposedly is the amount you're eligible for. Well, that could be, that number could have been a lot higher than you were at as of, January. That number could have been a lot more, and but that's okay. The SBA allows the banks to use, if they don't use the 12 months right up to February 29th, they can use the 12 months from 2019. Again, that's a different number, but they're allowed to use that. And so if you use that number, the banks are off the hook. That's a legitimate loan. That doesn't mean you're going to get that forgiven, because your employment for the current year could have been down. During this period, it could have been down. So you should have seasonally adjusted it. So you might not make the 75% of payroll costs, because your payroll is not as high as you were eligible for. And if you don't make that 75% of payroll costs, then you lose the money. Yeah, you don't lose it, but it doesn't become forgiven. It becomes a loan. So now you've got a loan, but it's a 2-year loan, and it's got to be paid back starting in 6 months. Whereas the other loan under the EIDL is a 30-year loan that doesn't have to start being paid back for a year, and it's a pretty decent interest rate. So there's some things going on there that people are you need to be aware of, but that's why it's happening. And there is some confusion. It seems like people say payroll costs, they think wages, but wages are just a very small portion of payroll costs, really, because according to the statute, you can get payroll costs, according to the statute for the PPP, also include contributions to retirement accounts, contributions, potentially matching contributions to 401ks, and pension plan contributions for the employees and the owners, but it doesn't define when. Are those payments just going to be evaluated during the 8 weeks? So if you make your payroll contribution annually, and you make it in November, and that's not part of the 8-week evaluation period, is the SBA going to come in and the bank's going to come in and say, well, you didn't make any pension contributions. You didn't make it until November. That doesn't count. It's got to be during the 8 weeks. And then are they going to come back and say, but you made your full pension contribution, and that pushes you over $100,000 in total payroll costs. And so therefore, a portion of that is excluded. Those are the questions the banks are having to deal with on the PPP side. And that's why it's very confusing. It's interesting that I'll give you one real interesting issue that's happening with the EIDL. The law says that on the PPP, you can include in that payroll protection loan, which is the one that potentially is going to be forgiven with that payroll protection program, that besides the wage, but the payroll costs and the rent and all the other things that you can include, you can also include any economic impact disaster loan that was made after January 31st, which is all of them, because none of them had been really filed by then, after January 31st, but before the time you get your PPP loan. Now, the SBA has come out with a rule, which is not law. It's just their interpretation. And they're saying that EIDL loan has to be between January 31st and April 3rd, because that's the date that they started taking applications for PPP loans. Well, nobody had a PPP loan as of April 3rd. Frankly, nobody had an economic impact disaster loan as of April 3rd that had been funded. So nobody would have qualified for that. Well, there had to be a reason they had it there. Now, I'll tell you the reason that makes a difference. If it's actually the way the law says, instead of the way that the SBA has tentatively interpreted the law, then if you got your economic impact disaster loan prior to your PPP, then you could roll that into your PPP loan. You say, well, why do you want to do that? You got a 30-year fixed rate loan at 3.75%. Because If you roll that into your PPP loan and your PPP loan gets forgiven, which again is based solely on payroll, if it gets forgiven, your economic impact disaster loan gets forgiven. So now you've got $500,000 forgiven, not just 2.5 months. That's a huge difference. And that's the way the law reads. So this is the kind of confusion that exists. And it's not because it's a bad program. It's because they rolled out a major program with a lot of very technical rules that require definition. Every law, every tax law that comes out. Now, the difference is on the tax side, the IRS is given the authority to interpret those rules. And their authority holds in almost all cases. It holds. The SBA isn't given that same authority. They're allowed to make rules, but they're not given the authority to override the law or to interpret the law different than what the law says. And they actually on their interim final rule that they issued, I love that, an interim final rule that they issued, it actually says we're ignoring this. It's not necessarily on this PPP. It was on another subject that they're specifically ignoring. That has to do with whether or not payroll costs include the employer's contribution to FICA taxes, Social Security and Medicare. The law makes it appear that those taxes are all excluded. So does and makes it that those taxes are excluded. It also says that your taxes for your the individual's federal income tax, their Social Security is exempted. In other words, that your payroll cost is not your total gross payroll; it's your total gross payroll less your taxes that you pay. In other words, that the government was trying to just give you net pay, not give you gross pay. And the idea was that if you got net pay and you didn't have to pay any of those taxes because the government was going to waive those taxes in some manner through a payroll tax deduction or some other manner, which they did do, then you didn't need that money. Well, that's very confusing, and they didn't. There's no mechanism for waiving those payroll taxes for everybody on everything for any extended period of time. So the SBA is interpreting that to say that the law was wrong and that it'll have to be fixed. There's no guarantee that's going to happen. So all of you out there that got your PPP and you based it on your wages, which seemed logical, right? If you take your wages and subtract out federal income tax withheld, FICA for the employee, and all of those numbers, if you subtract that number, you're going to immediately be below 75%. So even if you paid 100% of your gross wages, but the money that goes to taxes doesn't count, you're going to fall below 75% of the payroll cost being paid. Well, if that's the case, what's the big deal? Well, if you fall below 75%, it's all a loan. None of it is forgiven. It's not like 74% is forgiven. Or 75, 74, 73% is forgiven. It's not. It's all a loan. Now, if you fall below 100 but stay above 75, then that's a percentage. So 80% will be forgiven, or 76% will be forgiven. And that's how it would work. But when you fall below 75, the government had triggers in there. This was all about employment. So if you fall below 75% of their definition of payroll cost under the forgiveness program, you get zero forgiveness. You still get your loan. So you still get the loan. The bank made the loan legitimately. You still get the loan. They still have the guarantee. You just don't get your loan forgiven. So that's why that number that you were using on your PPP application was extremely important. And if you were putting down what the bank told you to put down or said you had to put down, in most cases, you were going to be putting down too much. Now, in a number of cases, particularly self-employed and partnerships, which we have a ton of those, ton of LLCs, taxes, partnerships, they were actually making you not get enough. They weren't allowing you to get anything for the employer, for the partner, or for the self-employed person. They were saying you had to file a separate application in some cases for that, which is not the case. You do not. You file the application for the entity, for the legal entity, for the LLC. If it has other payroll, you're eligible for that. And then your payroll, depending upon if you're a partner in a partnership LLC, you look at the K1 and see how much of the K1 shows self-employment income. And that's the salary that you use up to $100,000 annually, or $8,333 a month. If, on the other hand, you were self-employed, you've got a choice. You look at either your 2018 Schedule C and see, which is for this business, and see how much your net income was, and you use 1/12 of that. Or you can also use your income for 2019 if you haven't filed your tax return. So if you filed your 2019 tax return, that's what you would use. If you haven't filed your 2019 tax return, you can use your 2018 tax return, or you can use your financial statement, your income statement for 2019, assuming you have that available. And then that's what you would, that's what you would utilize. So, and again, caps out at $100,000 of total self-employment income. That doesn't make any difference that you're still paying taxes out of that and everything else. So, anyway, so that's some of the complications that are taking place out there in this. But so for those of you that are small businesses or small business owners, you really should be using both of these loans. Now, they're both, the SBA EIDL is stopped right now because it's used up its initial funding. But what I was going to say is it's going to open back up. And the interesting thing about the economic impact disaster loan is that there's a certain amount of guarantees that are allowed, because from a budget standpoint, a certain amount of those are going to go bad. But realistically, when actually the SBA makes the loan on the EIDL side, when they make the loan, it doesn't become a budget item. It doesn't become an expense, a budget item, until such time as you don't pay it back, because that is a loan. The EIDL is a loan. It's not a forgiveness program. So it becomes an asset. It becomes a loan, and the government doesn't lose anything. It doesn't cost the government anything until you don't pay it back. So if you pay it back, that economic disaster loan costs nothing. The government may have had to borrow some money to give you some money, but they made money on that borrowing. Their rate of borrowing was less than yours, and so they made some money. So technically on these SBA EIDL loans, the economic impact loans, the government makes money on those. There is no cost to the government for those. So therefore, there is no threshold level. Now, there's a potential cost, and so that's why the government is concerned about how much is being insured, because that insurance is potentially a risk to the government. But that money could go a lot further than the PPP, because the PPP is also insured by the government at 100%, but it's designed to be forgiven. So the government is only allocating as much money as they think is going to be forgiven on the PPP. That's why you're looking at, that's why you're looking at a loan, an allocation amount of another $300 billion or whatever the number is going to be. It was $349 the first time, and then it was supposed to be an additional $250. I think, though, in this final bill, it's $484 is what's come out of the Senate. Now, what'll end up happening in the House is a whole different story. But it's and that. So, by the way, that money is not available yet. It probably won't be available until Friday, because the House isn't going to vote, I don't believe, until tomorrow. They couldn't get everybody back in session because everybody was gone. And so that's not going to happen until tomorrow. And then the president really probably can't sign it until tomorrow after it's passed, and then it would go into effect on Friday. But anyway, so that's where there'll be more allocation, and that's where also I think there's $60 billion in there for the EIDL. So I think the EIDL will open up again too, because $60 billion, like I say, on the loan side goes a lot further than $60 billion does on a forgiveness side. So you'd say, well, gee, the PPP's $350 million. They ran out of that. How's the economic income impact is that? Because again, That's not a cost to them unless the loan goes under and they have to make good on their on the loan. They have to pay the loan off. That doesn't happen very often. Probably of these loans that the SBA makes, because they do have, in some cases, they have collateral. Although on this one, they're not taking any real estate as collateral, but they do have some collateral, and they do have a guarantee if it's over 200,000. So the fact of the matter is that on the economic impact disaster loan, the government doesn't lose much money. Probably maybe less than 5%. So, if we're talking 500 billion for the PPP, and that's all going to be forgiven, that same 500 billion would be about 30 billion on, would be somewhere right around, probably somewhere around 25 billion on the EIDL side. So basically, if the government is providing another 60 billion, they're providing almost $1 trillion, probably a little over $1 trillion in additional guarantees. So that EIDL should have money effective with this. So get out there and file that. And my recommendation would be don't hold up your PPP loan, because the banks don't know what's going. But if you filed your EIDL loan and you've got your advance, I would, every indication is that if you've gotten that advance, you're going to get what you requested on the EIDL. Some people thought that was only $10,000. It was not. It was a much larger number than that. You had to report your total sales and your total cost of sales less wages. So if you're a business that does, let's say you do $2 million a year in sales, and you have, let's say you have 2 million in sales, and you have a $1.5 million in cost of sales, but let's say $1 million of that $1.5 million is wages, because you're basically a labor type, like construction or whatever. So maybe most of it's labor and a lot of it's not direct materials. All right. So when you take the labor out of there, you got 2 million, you've got a half a million of direct materials. You've got $1.5 million of net gross profit, not net income, but net gross profit. You've got, about $1.5 million. So you're eligible for a $750,000 EIDL loan that, again, is at 3.75%. Now, that loan can potentially be rolled into this PPP. And that's where, you kind of need to keep your ear open and decide what you're going to do. There is a place when you file for the PPP, it asks you if you have an EIDL. Now, technically, under the interim final rule, that is supposed to be an EIDL that was made before April 3rd. If you have one of those, call me, because I don't know anybody that's got them. And I'm in touch with a number of CPAs around the state. There are very few that have that have even gotten. I had one that got notification that they were going to be funded, but they were not funded by April 3rd. So bottom line is that, you may be able to put that, if the banks were up on this, they would be looking at the statute instead of trying to interpret a bunch of stuff. They would be looking at the statute, and they would allow you, assuming you had already been you'd already gotten your advance on your EIDL. That means that you've been approved for the loan, most likely. But it's obvious that you have at least applied already. So the loan is in the process of being made. So the question is, the question is, are you, should you put that on there? Because you could get that $500,000 or 300,000, whatever that number happens to be. You could get that number forgiven. And that would be really nice to also get that loan forgiven and not have to pay it back. Now, the risk there is if you throw it on your EIDL, on your PPP loan application, you might, first of all, it might get accepted, but it might be treated as a loan, and then you'd have to pay it off over 2 years instead of 30 years. That wouldn't be that good, because your payment would be pretty high, and nobody's going to be able to make those. So now, and then the other bad thing about it is that if you get it on there and it, it it could confuse the bank and slow down the bank process, particularly at small banks. Maybe if you're talking, Bank of America or Wells Fargo or one of these really large, maybe TD Bank, one of these really large SBA lenders, they probably know the rules. They know the laws. They're not looking at what the SBA said. They're looking at what the statutes are. And they probably would know, but they're not making loans right now. They made them all to their big customers because that's how they knew to slip them in. And they've made all these loans to their big customers right now, so they're not taking apps. So I'm pretty sure that if you tried to do that with Seacoast or Center States, their people probably aren't going to be aware of that. And it's probably going to uh, you know, what will really happen from a practical standpoint is they will have to research it. So that'll kick it up the line to somebody in the bank who's overworked right now and frankly underpaid, trying to get all these loans approved anyway for all of the branches because it's going to be somebody who's in charge of the whole operation. They're not going to have time to sit down and research it. So what they're going to say is, look, put that down. I'll get back to it in a couple days. And what's going to happen in a couple days? There ain't going to be any money, so you don't have to look at those anymore. That's what a lot of the banks, frankly, are doing. If there's anything that's out of the ordinary, the way they interpret the ordinary, they're kicking it aside and looking at it. Well, um, whether you're right or not at that point, it doesn't make any difference because you're not going to get your PPP loan. And so you can't get your PPP loan forgiven if you don't have one. So at that point, I think you got to just, what I've been doing right now is if I've got a client that's got the EIDL, none of them have it before April 3rd, so it doesn't meet the interim rule. I'm going to potentially go back later and ask for a modification of my loan with the bank and with the SBA to move it in once I know for sure that that's possible. We may have a chance to do that prior to the forgiveness. It's an 8-week forgiveness period. By then, we may know for sure what they're doing. And those EIDL loans hopefully will be made by then. They were supposed to be available in 3 weeks. And it's been, well over 5 at this point. So anyway, that's kind of where we're at on these things. So I wanted to kind of go with that and kind of give you an update. Just some statistics. I don't know how good this is. Some of this information I'm reading on this website has been wrong, but it says as of April 19th, my son's birthday. As of April 19th, SBA had approved almost 27,000 EIDL loans valued at $5.6 billion. Another 755,000 businesses received EIDL grants worth a total of $3.3 billion. So, obviously, there was some sent that had been sent money out. These, and it says had approved. It doesn't say that the money has been issued. The ones that received grants, 3.3 billion. So that is, that is a fairly small number of businesses because they made it based on the grants based on employees. And originally it was supposed to go to the small businesses and they didn't have to have employees. So this was one place where the small business really got hurt and it hasn't been corrected. Trump administration officials said that 4 million business owners had applied for assistance worth $383 billion, far more than the $17 billion allocated for the program. But that the PPP has also been seen overwhelming demand with funding running out in a matter of days. A legislative compromise announced on Tuesday could replenish both programs, with the PPP getting another $320 billion and EIDL getting $60 billion. But it says that there were 4 million business owners that applied for assistance worth $383 billion. It says far more than the $17 billion allocated for the program, but not necessarily. Like I said before, that's if every owner's loan was going to go bad. At $300 billion, if you use 5%, you're talking about 18, 19 billion. So that's exactly where they're at. So they've shut it off because there's 383 billion worth of loans, but there's only 17 billion that potentially they'll lose money on those if they're loans. Now, what they've had to do is shut off the advance because the advance is given for being forgiven. So it's a dollar for dollar reduction. So when they talk about, you know, 755,000 received EIDL grants worth a total of 3.3 billion, that did use up the part of the 17 billion. It used it up immediately because those are being forgiven. If you don't get the loan, they're grants, they're being forgiven. Now, originally, if you got the loan, they were going to come off of the loan balance. They were going to come off. They're not going to be considered a forgiven advance. They were going to be considered part of the loan. But that's why you had the ability to roll the loan into the PPP and then get it forgiven that way. So what's happened right now is that they've just basically come up with this base provision, but they're still going to issue money, and that money on the EIDL side will be a lot larger. Like I say, the 60 billion that they've approved, if that goes out as loans, not grants, you're talking about you're talking about basically $1 trillion that they can put out. So they should have plenty of money on that side. Anyway, that's kind of just some information, what's going on out there. There's a lot of there's a lot of bad information. You say, well, how do you know your information is good? Mine might not be. Mine might be bad too. But I've gotten a lot of my information from a friend of mine who has been doing disaster loans for 40 years all over the country. Hurricanes, economic disasters, all of these type of things. He's been doing them, and he's got some pretty good contacts within the SBA. I say pretty good. They're in Dallas. They're as high as they go. So he's not in Washington, but he does have some pretty good contacts in Dallas that he is, daily able to communicate with and find out what's going on, what's happening. He was the one that said you could have an EIDL and a PPP when the U.S. Chamber was saying you couldn't, and others. He was the one that has been constantly. He's the one that knew about the stuff being transferred to Rocket Mortgage before that was released, long before that was released. So he's been pretty much on target. He's been really on target on the EIDL side, on the stuff that's the economic impact side. The 7A, the PPP, that's a brand new program, but the good thing is he does know the SBA. So some of these things, for example, he was fully aware, as were obviously most of the big banks, that there was an exception in the SBA requirements for the PPP that allowed businesses that had affiliates, and this is true on the EIDL side too, that had affiliates to be able to borrow a lot of money. So you heard the stories about Ruth Chris and all these other places getting $20 million and $10 million when the maximum on the PPP is $10 million. You think that's got to be a business with over 500 employees. Well, typically what they are is they might be large corporate, and those are excluded, but franchises were not excluded. So normally, franchises would have other methods so that the franchise itself couldn't get a lot of money. And so, what it boils down to is that this law was designed to encourage restaurants in particular, including franchise restaurants, which took a big hit, to get some money to help out to keep the people employed, the servers and the cooks and everybody else. So the idea is that Ruth's Chris has access to money that the small business owner doesn't have. So, and you heard it. The one company, I think Steak and Shake, is giving back their $10 million. So you say, well, wow, that's really generous. Well, yeah, but Steak and Shake is a large publicly traded company, ultimately, that can go get their money from a lot of sources. They can go issue stock. The Gafford can't issue stock. He can't go out and issue stock. Nobody's buying stock in the Gafford. And he doesn't want to sell it. He loses his business, so it's a whole different story when you're a CEO getting a salary. you don't really care who the owners of your business are as long as you stay the CEO. So you go out and just issue new stock. You've got, you've got more shareholders. Who cares? You go out and borrow money cheaper than the banks because you're borrowing on the commercial paper market, or you're borrowing, internationally at negative interest rates. So again, like I say, the Gafford can't go over uh, to Germany or Italy and say, "Hey, I want to borrow $1 million at negative 2%." They can't do that. So, but frankly, Ruth Chris can. They could do that. They can go over to a European bank, say, "I want to borrow some money." They don't even have to go over to Europe. They can do it in the United States. They can do it during quarantine. Anyway, so there was a bunch of other options. So that's kind of what's going on as an update with this stuff. It's necessary because here's the problem. Most of these businesses are already dead. We have, and I've said this time and time again, and I think people are starting to realize, but they still aren't realizing it. When I hear people say, "Oh, by the way, let's just stay closed till August. Let's stay closed till July." It doesn't work. You are out of business by then. And you say, "Well, big deal. They'll start back up again." No, no, no. First of all, they'll be out of business. There is no capital to start back up again. All of the money you had invested in your small business is gone. I talked to a small business owner the other day. He didn't realize it, but he had over $300,000 invested in his business. $300,000. It's money he's paid tax on. He can't get out. Why can't he? Because there's no cash to get it out. He's having to use it, always has had to use it for working capital. That was money he had invested in his business that if he lost everything, he's going to lose $300,000. He's paid taxes on it just like he got it, but he's never got it. He reinvested it in his business. Multiply that by 1 million or 20 million, because there's about 20 million of those types of small businesses out there. So multiply those numbers by 20 million and you'll see the economic loss. When that much money is gone, there is no capital to start back up. They can't borrow money again because they've gone bankrupt. They can't get the money. Nobody has the money to invest. The investors don't have the money because many of them lost. So don't think that you could start it over again. You cannot. Once those businesses are gone, they're gone. And it's going to take as long to start them up. For example, if I start over again, do I have to wait until the bankruptcy rolls off my back? Probably. Do I have to wait at least 2 years? Yes, because most banks won't even lend you money if you're within the first 2 years. So if that business goes under and doesn't and is gone, it's not going to jump back in August or whatever. It is going to jump back in 2 years from now. And that's way too late. That's a different economy by then. It'll probably be a different business. Who knows if we'll even have those kind of restaurants anymore? Who knows? Who knows what the deal will be? But I'm telling you, when you have 40 million people unemployed, numbers that are greater than the Great Depression, and like I said to you before on the show, and many of you, I went and looked, you probably heard this week the statistics came out. If we have a depression, which we're in, if we have a depression the size of the Great Depression, which we are approaching, if we have that, the number of deaths, not financial problems, not financial ruin, the number of deaths will be in the millions versus the death from the coronavirus being in the thousands. So think about that. We have kept potentially 50 or 60, we have potentially kept 100,000 people or 60 or 70,000 people from dying. And in exchange for that, we are going to kill 1 million. You can say whatever you want, but the facts are the facts. Economically, that's what happens in a depression. We're talking about millions of deaths. So anyway, I'll leave you with that positive note. Look for the EIDL money. Look for your stimulus check. I appreciate you joining us on Wednesday. We'll probably still try to keep you up to date on what's going on, because that's important for you and all of you here in Martin County. Thanks for joining us on WSTU Digital 1450, the Martin County's Heritage Station.